GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we bring updates as exciting as the White House Crypto Summit on Friday. I'm your host, Jay Hamilton. It's Wednesday, March 5th, and today we are super excited to be joined by Mark Yusko, one of the best crypto and macro investors in the space. He's also the founder, CEO, and CIO of Morgan Creek Capital, which has about $2 billion in assets under management. Today, you guessed it, we're going to talk about the White House Crypto Summit on Friday. We're going to talk about the U.S. Strategic Reserve, Bitcoin, other assets, what's going to be in it, what are Mark's thoughts, and also we're going to zoom out and get Mark's thoughts on the macro state, China, the U.S. economy, where he thinks everything is heading, and how you can position your portfolio to take advantage of all of that. Before we jump in, we have a Telegram group for everybody here where you can talk to myself and my team every day about the guests we have on. So please join our Telegram group if you haven't already. Today's episode is brought to you by Definitive, advanced trading on every chain. Also by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin CSUSDL. Without further ado, Mark, welcome to the Milk Road Show.
No, thanks for having me on. Excited about the conversation, and let's get to it.
Pleasure to have you. Okay, let's start off with the strategic reserve is taking all the attention this week. Earlier, we had some speculation that well, first, I should say, actually, we'll roll back even further. Over the weekend, Trump tweeted that he was going to do a strategic reserve, and it would include 5 assets: Bitcoin, Ethereum, Solana, XRP, and Cardano. And then Howard Lutnick, the Commerce Secretary, yesterday said that he thinks that, I want to be clear here, he said he thinks that Trump will execute the Bitcoin strategic reserve on Friday at the Crypto Summit. Let's step back for a second. Mark, what do you think might happen this Friday?
Yeah, so look, we have to be careful about words. You know, President Trump isn't always the most careful with his words. I mean, I tend to like that he's prone to hyperbole. I resemble that remark. I kind of speak in hyperbole sometimes. But the reality is, he said in Nashville, back a year ago that he was going to do all these things. And why did he say all these things, right? Why did he talk about a Bitcoin reserve? Why did he talk about Bitcoin? Why did he talk about, free Ross? Thankfully, he did that. That was amazing. So he talked about it because someone told him that there are a whole bunch of people that own this asset that were one issue voters. It's like, oh, really? So I could get them if I'm nice to them? And I loved when he was in Nashville and he said, on day one, I will fire Gary Gensler. And the crowd went crazy. And I loved watching his face. I mean, he was like literally shocked at how excited people were. He's like, I'm going to say that again. On day one, I will fire Gary Gensler. And he didn't have to. Gary resigned. But, I think what he said then was Bitcoin strategic reserve. Well, then he's like, well, I'm going to sign an executive order. Well, it doesn't work exactly that way. An executive order was able to be drafted for a strategic strategic crypto stockpile. No, I'm sorry, crypto asset stockpile, not strategic, crypto asset stockpile. Well, all that meant was the stuff they've already seized, which included like 7 coins, that was now not going to be sold because Democrats before, right after Nashville, they're like, oh, we're going to sell this stuff before you get here. And he's like, well, all right, no more selling. So everyone got all excited about that, but that was not a strategic reserve. That was a crypto asset stockpile. It was basically labeling something that already existed. Okay. Then, a whole bunch of stuff happens up and down. People start talking about it. And, last week we had this massive dump. Well, why? Well, you had the unwinding of this arbitrage that's been going on where the big dogs, and I mean super big dogs, big hedge funds like Millennium and Citadel and others, were basically buying BlackRock's ETF, but they weren't buying it to go long. I love when people report, Millennium has $2 billion. Yeah, but they're at least 2 billion, maybe even a little more short the future. Why? Well, the futures price and the spot price are not the same. The futures price on average is about a 10, 11, 12% annualized return. But over the course of the month, you roll down the yield curve, okay? And those prices become the same. And so you then do it all over the next month. And you can arbitrage this risklessly, 11, 12%. You can lever it up and make even more than that. Well, the problem is over time, if so many people do that, it goes from 12 to 11 to 10 to 9. Well, it gotten down to like 6-ish%. And so if your cost of funding is 5 and you're only making 6, there's other stuff I can do with my capital. So people started unwinding. And so there were outflows from the Bitcoin ETF and people freaked and the price collapsed. Well, then you got tariff wars and macro stuff going on, and people are getting margin calls. When you get a margin call, you don't sell what you want to sell. You sell what you can sell, the most liquid thing. And in some cases, that was Bitcoin or ETFs. So we had this spiraling down. So on Friday morning, we got the first saving grace, the lifeline, is Larry Fink says, oh, we're going to put 1 to 2% in all of our own, our own ETF in all of our model portfolios. So the price stopped going down, went from 107 down to 79, stopped going down and actually rallied. And then people were like, well, but that's going to take time. And wait, we still had outflows because people were still unwinding because it was triple witching on Friday. So that didn't really work. So then on Sunday, the Donald says, we're going to have this strategic reserve. And he said Bitcoin, Ethereum, XRP, Solana, and Cardano. And everyone's like, oh, yay. And everything went up. And, the Bitcoin's up 10% and the other stuff is up 20 plus percent.
Cardano went up 60%.
There's no action by Congress. He just said it. And then his, son repeated. But here's the problem. Why did he go beyond Bitcoin? We all know that Bitcoin is a better form of money. What is money? Money is an asset that exists in the absence of a liability. That's been gold for 5,000 years. Bitcoin is digital gold. Now, the thing about gold, it's the only thing that's both a commodity and a currency, right? I mean, silver too, but basically it's gold. Well, Bitcoin is that, but on steroids because it's more divisible. Like, let's say I had a gold bar under my desk, like Kyle Bass literally has a big giant gold coin under his desk in a safe that he shows off to people. Let's say I had that and I wanted to, break it in half and send you half, Jay. Well, I'm not strong enough to actually break that gold bar in half. And what if I wanted to break it into lots of pieces and send to all the listeners? Couldn't do that. But let's say I could. I couldn't stuff it in the computer and send it to y'all. Well, with a couple clicks on my phone, I can send Bitcoin anywhere to anyone without any intermediary. That's why gold is being replaced ultimately by Bitcoin. Well, because more divisible, more portable, and equally scarce. All right, well, that's great. Well, what does that mean? Well, it means central banks, which use gold as the base layer of money. Remember, gold is money. Everything else is just credit. Everything that we think of as money is just currency. Currency is backed by debt. Well, those sit on top, right? We got paper currency up here. Then we got Visa. I don't carry paper currency. I use a Visa card, and every 30 days I settle up on ACH to my bank, and they, take the money out of my account, and then they settle up on some periodic basis to FedWire, which then sits on top of the gold at Fort Knox, assuming the gold's there. So all of that is based. All the total monetary system is based on gold. Ultimately, I think that'll be based on Bitcoin. It'll be the base layer. Okay, so swapping gold for Bitcoin, that makes sense. Strategic Bitcoin reserve, let's do it. Well, then why all this other crud? Why Ethereum? Why Solana? Why? Okay, especially, not Solana and Ethereum. Solana and Ethereum kind of get a pass because they're active and smart
They
contract.
have adoption. There is action happening.
There's some use cases.
Yeah,
it's kind of like maybe they could be those intermediate layers like Fedwire and ACH. Maybe they could be the second and third layers on top of Bitcoin. Maybe. But bottom line is fine. But the other two, XRP and Cardano, why? Okay, Charles and Brad, and I'm not casting aspersions, this is facts, it's been reported, paid a lot of money to both sides, right? They started with the Democrats, now they're going to the Republicans. They're paying because they want their chain. But here's the funny thing, and I mean this semi-respectfully, but I've been doing venture capital in the space, in the digital space now for 7 years, which is not all the time in the world, but we were the third firm. There was Pantera, there was Blockchain Capital, and then us. And then all these other, and a lot of them more successful, but we're there. And we've been around a long time. And so I've been doing this. Not once have I ever had a team come pitch me a deal building on either one of those chains. Look, I've had lots of people pitch me on Ethereum. I've had lots of people pitch me on Solana. Tons and tons of people pitch me on Bitcoin. Not one on either one of those two chains. So maybe there's some there. Maybe there's some tech there. They seem like they were just big pre-mines and people get rich by selling them to the plebs. But okay, so why does Trump say these other things? Well, because if you look at the thing that his affiliates, and I don't know if it's his son or the friends or whatever, they own everything but Bitcoin. So they own all those things in that Liberty Digital thing. And so every time Trump tweets about it, the price goes up. He likes to make money. He really likes to make money a lot. So that's a long-winded way of saying, I think on Friday, they'll announce a strategic Bitcoin reserve, Bitcoin only. They'll say some nice things about the other coins, like maybe they'll say, made in America coins, MAGA, then, or MACA, I guess, then no taxes. Now they might say no taxes on all crypto. That would be pretty amazing. No capital gains taxes. But here's the thing, right? Donald Trump is really good at passing laws that make him and his family wealthy. Full stop. If you go back to his first term, all other LLCs, except real estate, have to pay this tax. But real estate, which he happens to be in, doesn't have to pay this tax. Inheritance, all these things, he's pretty good at it. And okay, fine. I don't begrudge him that. But he owns a bunch of crypto now of different variations. Do I think he's going to do his best to make sure he pays the least? Of course. It's like when the Secret Service stayed at his hotels. Seems like a conflict to me, but no one seems to care. So whatever. So anyway, that's where I think we're at. I think we get the SBR. I think the other people paid enough money to make nice. Although it's interesting, I guess money does buy anything because, Trump was pretty pissed off at Garlinghouse for supporting, his opponent, and pretty big money to her for her campaign. And at one point in a meeting at the White House, Mar-a-Lago, he kind of said, dude, where were you when I was running for president? Now suddenly you want favors? So I thought that was interesting. So if he's paid reparations, shall we say, to get back on Trump's good side, that would be interesting.
Yeah, I think it's clear that if he is going to announce the strategic Bitcoin reserve on Friday, this was his one chance to talk about these other coins before that. After he announces this on Friday, which we all know Trump, he goes into a big event like this. He wants to make some big announcements. He wants the media attention. He needs that. So we can expect that. So I think, he strategically knew he had one shot to fire here to help out his buddies, to help out his family. And so he did that. But the other thing is Howard Lutnick said that he thinks Trump will treat Bitcoin and these other assets separately or differently in some way. So it feels clear that where we are headed is a likely strategic Bitcoin reserve. As you said, that also it's easier to make that a reality than to try to convince the Treasury or Congress or the steps that would need to happen in order for a reserve at the scale that we're talking about to become a reality, to convince that many people and that we should be spending U.S. tax dollars on other assets is tough.
It's really hard in my mind to have a chain that isn't proof of work be a reserve asset. That doesn't mean a non-proof of work chain can't do other things in the decentralized world that we're moving toward. But a permanent, immutable, purely decentralized chain, for me, like if I own anything of value, I won't say it's silly, but I have a PFP, right? I'm part of the on-chain monkey community, and I love the on-chain monkey community. So I don't mean to say it's silly, but some people think PFPs are silly. Some people think NFTs are silly. I think NFTs are amazing, right? Non-fungible token just means a line item on a ledger. I think every asset, every stock, every bond, every currency, every commodity, every piece of art, every piece of real estate, every private business, everything, every collectible will ultimately be an entry on a ledger, an NFT. Now, I would like to call it personal property rights or digital property rights instead of non-fungible token, but we are where we are. But I have that thing, and it's a one of one, and there are only 20 out of this 10,000 collection. So now people say, well, who cares? They're ugly. Whatever. Everyone's entitled. No accounting for taste. Art is a unique thing. I like the picture behind me. Some people don't. And it is a one-on-one. So to me, it has value. But ultimately, I don't know if you saw the video of the kid that opened the Lord of the Rings one of one Magic the Gathering card.
No,
like literally, Magic Gathering cards are cool, and some of them are valuable. And they did a collab with the Lord of the Rings, and they printed one card with the ring. And this kid opened it, and his hands shaking because it's $2.5 million. You're like, no, it's a piece of cardboard. There are people who would pay him on the spot $2.5 million or more to have that one of one. It's like, why are sports teams worth so much? Because they're scarce. But long story short, where do I want my scarce assets in the digital realm? Do I want them on a chain that's a pointer to an AWS server? I want them on a chain where they're on-chain, verifiable by proof of work. So for me, do we get to using the Lord of the Rings? I used to have this view that, in Web 1, we have 5, and Web 2, we have 5 protocols. We got TCP/IP, which you and I are using right now to talk. We have FTP to move files. We have HTTPS for websites. We have SMTP for email. And then we got www that ties it all together. I was like, well, in Web 3, are we going to have that same kind of 5? And is Bitcoin the base layer? And is Filecoin like FTP? And is Ethereum like www dot? But then it kind of breaks down. It's like, what's email? Is that Cosmos or Polkadot or Solana? I don't know. Maybe. And then people are like, no, we're going to have all these chains, all these L1s, and we're going to have links or bridges. But the bridges suck, and that's where all the exploits. Oh, but then Chainlink says, oh, well, we fixed that. Maybe. Okay. But I'm starting to lean to the one chain to rule all chains, like Bitcoin. And then we have L2s and L3s and L4s, kind of like Gold and Fedwire and ACH and Visa Network.
Yeah, it's very difficult to predict the future. The one thing that I think is so clear right now is that Bitcoin has clearly solidified its place as digital gold. Yeah. And it makes a lot of sense for a government that holds a lot of gold to start to reallocate some of that gold to Bitcoin. End of story.
And you can have both, right?
And you can have both.
People are like, exactly. Oh, you need to sell it. No, there's a world. I don't want to live in this world, but there is a world like where electricity doesn't work and the internet's down, where having physical gold like the Mad Max kind of thing. I don't really want to live in that world, but there are stores or people, getting out of a war-torn country by, giving people their earrings. And look, physical gold has a role, and it has had a role for 5,000 years. I mean, it's not an accident that it's been a perfect store of value. And a single ounce, this is a crazy thing, a single ounce would buy you a fine person's suit for 5,000 years. From Cleopatra's time to a suit of armor to a zoot suit in the 20s to Savile Row today. You go to Savile Row, you give them an ounce of gold, and they'll give you a very nice suit. Man or woman, doesn't matter. So that's real. So you can have both. But if you think about a strategic reserve, ultimately, you want to have real assets that are scarce, provably scarce. And that's why we use this thing stock to flow, which means the flow of an asset relative to its underlying stock, you want to be low, or you want the stock to flow to be very high. And the amount of gold that's produced every year roughly equals the amount that's lost or stolen or used in industrial purposes. So the stock to flow is very high. Bitcoin's is actually a little higher because we provably know how many new coins are going to be created for the next 140 years before they stop being created. And then we go to transaction-based. So this provably scarce asset that is digitally superior, right, more divisible, more portable, is the next 5,000 years or 10,000 years or however long we survive as a species. But I don't think we need to ditch physical gold. I have a little bit of both. I have more Bitcoin than gold, but and I like Bitcoin because it is not only an amazing store of value, but it actually is. People say, well, it does. It doesn't do what it said it was going to do. The white paper.
Yep.
Peer-to-peer electronic,
Payments.
digital electronic cash system. Well, no, it is. If I want to send you value, I can, with a couple clicks on a phone, send you Bitcoin through the network. No peer, and it's peer-to-peer. Meaning, if I want to send you money, I have to have a bank account. You have to have a bank account. And we pay a wire fee. And because it's across international borders, because you're in Canada, at least international for now, right? We have to pay the Rothschilds because their BIS has to get paid because of a 400-year-old treaty, which seems silly to me. But that's crazy when I can use this technology, better technology. And look, the banking system that everybody hates, right? Oh, fractional reserve banking, it's awful. I ask people all the time. Name a place you would live that has a bad or absent fractional reserve banking system. I'll wait because you can't do it. And so banking is not the devil. It's the extraction of fees for trust. That's the devil, right? 7 trillion with a T. And no one even knows what a trillion is, right? But a trillion, you and I would have to sit here and talk for 31,710 years. And as much as I enjoy in this conversation, I'm
not offended, Mark.
Right? And we have to spend $1 a second. That's 1 trillion. So 7 of those babies are extracted from us around the world for trust. And I use a simple example all the time. So let's say I lent you money back, and I'm old. So I write my papyrus tablet that you owe me $100. You come back a year later to pay me 110, and I'm an unscrupulous guy. I was untrustworthy. I changed the number from 100 to 200. You come back to pay me. I say you owe me 220. You trusted me, and that was a mistake because the ledger says 200. So the Medicis, 838 years ago, came in and said, well, Jay, you keep a ledger. Mark, you keep a ledger. And we, the benevolent Medicis, for a small fee, will make sure the ledgers match. But here's the thing. While you're away working for the 110, I go to the Medicis and I say, you know what? I'm going to change mine to 200. I'm going to give you half. They're like, done.
Sounds
Easy.
good.
So you come back to pay 110. I say 220. Hey, Medicis. And they're like, I'm sorry, Jay, you must have written the number down wrong. So we shouldn't have trusted them. And look, the trust system has worked really well most of the time, except for when the banks get fined, for 838 years. But now we don't need trust. Now we have truth. We have a third ledger, this permanent, immutable, beautiful ledger, verified by proof of work, where we're converting energy into value, which is what we do every day, right? Fuel our bodies, make value. So that's what life is about. And now we have this perfect immutable ledger that says Mark writes down 100, Jay writes down 100, Ledger writes down 100, 51% say, yep, that's what happened. Can't be changed. I can't change it. I can't say, no, it's 220. You come back, pay me 110, and we're done. Truth is better than trust. And truth is free-ish. It's not completely free, but the people who get paid are the people securing the network, the miners, through this thing called block rewards and transaction fees, rather than you and I paying the trust institutions to guarantee that the money is where it is.
I want to shift gears. I completely agree with everything you're saying. I want to shift gears to macro and US and China and get some bigger picture outlook, because Bitcoin jumped to 90K today. I think we're sitting just below 90K as of right now. But everybody's feeling good. But it feels like there might be some more pain still to come. And so I want to get your take on that. Before we do, we just need to take a quick moment to hear from our sponsors who make the show possible. If you're only trading on centralized exchanges, you're not going to make it, because the alpha is on-chain. Founded by Coinbase alum, Definitive lets you trade any token on Solana, Base, and every major chain, all in one single platform. What makes Definitive different is its advanced order types. You can execute limit, TWAP, and stop loss completely on-chain. Get the best prices on every trade. Your order is instantly routed through every DEX and liquidity pool with up to 19 times lower fees compared to other platforms. Trusted by funds, DAOs, and the milkman himself, Definitive lets anyone trade like a pro. Right now, Milk Road listeners get zero trading fees on your first $25,000 in trading volume. Go to milkroad.definitive.fi. Today's show is also brought to you by Coinshift. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security, backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCS USDL is gaining traction at milkroad.com/Coinshift. All right, Mark, let's talk
Those
about...
are great.
Oh, thank you. Appreciate it. That's very nice. Let's talk about the macro state right now. What are your thoughts on where we are currently in the macro regime?
Yeah, I mean, macro can be summed up in a simple word, two simple words: money supply, right? So money supply, which is actually why we're talking about all this other stuff, right? Why Bitcoin's so great. The money supply has been growing at a truly astonishing rate for a very long time, and it's because of my generation, the boomers. The boomers create a bunch of entitlements. What's an entitlement? It's a promise you make to yourself that you don't fund, that you ask your kids to pay for. Who wouldn't vote for that? So the boomers voted for all these entitlements. And turns out the only way to get them was to issue lots and lots of debt. So we have this massive debt overhang, 36 trillion and rising. And then there's that T word again. So what does all that mean? Well, what that means is, in order to service the debt, right, in order to create GDP when you have so much leverage, you have to increase the circulation of money. So money supply has grown about 8% since the creation of the Fed. And all this boils down to the difference between kind of real money, right, money that doesn't devalue, and devaluing paper currencies, fiat currencies. So from 1776 to 1913, a dollar was worth a dollar. There's a little fluctuation in value around wars and depressions, but a dollar was worth a dollar. There was no such thing as inflation. So then the Fed was created in 1913. Well, why was the Fed created in 1913? Well, if you go all the way back, right, who had the first world reserve currency? Portugal, interestingly enough. Well, how's little tiny Portugal, right, about the size of, New Jersey, have world reserve currency? Well, they had the fastest, most powerful navy because they had the tallest trees. So they're the most, lethal fighting force, and they had the Knights Templar, and so they had the world reserve currency. Well, then the Spanish Armada overtook them, and they became the world reserve currency. And then little Netherlands, and it's about the size of Ohio, conquered the Spanish Armada. How the hell did that happen? They created the first central bank. They created a bank where they could literally print money out of thin air. Before that, money had to be earned or created or held. It was commodity-based, gold and silver. That's why Spain and Portugal explored the seas to get the gold and silver to plunder, to bring back, to have money. Well, the Dutch said, screw that. We don't want to go find it. We'll just print it. So they created this bank, and they funded a mercenary force which took over the Spanish Armada. Well, then Napoleon, who was a pretty good general, you guys have all seen the movie, took them over, and they had it for a while. Well, then some of the Rothschilds went up to the UK, and they took the model from the Netherlands and created a central bank in the UK, and they funded steamship technology, which defeated the French Navy, and then they were the world reserve currency. And they were the dominant superpower for, 70 plus years. The sun never set on the British Empire. And then in 1913, coincidentally, they invaded Mesopotamia, incurred a bunch of debt. The pound sterling collapsed. The dollar ascended. Over the next 31 years, we became the ascendant power. We were, little emerging market before that. And we had nuclear power. So our Navy has kept us the world superpower. But we also cut a deal in 1971 with the Saudis, saying, look, as long as you price oil in dollars, we'll protect you, because that keeps the dollar the hegemonic world reserve currency. Well, now what's going on? Well, we did all this. We established the Fed. The Fed has been stealing 2% of our wealth or more every year. I mean, think about that. Who came up with an idea that over a 30-year period, half my wealth has been confiscated? That's not good for me. In no way is that good for me. So this idea of inflation, but it makes us feel good because our homes and our stocks and our stuff goes up. Like I live in Chapel Hill, North Carolina. According to Zillow, my house went up 50% in the last 2 years. But my house did not grow. It did not get more efficient. It actually wore out a little bit. I had to put money into it. What happened? The money got worse. And this is why Bitcoin is so awesome, and how it all kind of comes back to macro and ultimately China, is one Bitcoin is one Bitcoin. Will always be one Bitcoin. And one of my favorite things, there's this artist, and I should get her name right, she's a cartoonist, Lena Saichi, maybe. And she has this 4-panel cartoon. In the upper left panel, there is a Lambo and a mansion. It says millionaire and homeless person, Bitcoiner. That's, 2009. Then in, 2015, you got a nice house and a little shack, millionaire, Bitcoiner. And then it says 2030, you got a little shack, millionaire, and a mansion and a Lambo, Bitcoiner. And then 2040, it's a castle and 3 girls saying, can you believe he has a whole Bitcoin? And so one Bitcoin is one Bitcoin. So it's not about the Bitcoin. It's about the amount of currency, yen, euro, dollar, that keep getting devalued. I mean, here's the crazy stat. 80% of all the dollars that have ever existed in the history of the world, right? 248 years as a republic, and 80% in the last 5 years. It's insane, right? That's just devaluation of the money. So yes, stocks look like they're at all-time highs when you price in toilet paper. When you price in gold, they're the same price as 1996, because gold is money and everything else is just being devalued. So what's happening, and why is all this macro, and why is this trade war nonsense? Well, 10 years ago-ish, China said, you know what? From 1990 to 2020, we wanted to be a moderately prosperous socialism economy. It was called the Harmonious Rise. So they took 700 million people out of abject poverty, created a middle class, and said, we want to become a harmonious socialism, moderately prosperous economy. And they did. They came back to become the second or first, depending on how you count, largest economy in the world. Now, remember, for 1,800 of 2,000 years, China was the dominant superpower. Then they had a 200-year mistake with communism, and now they're back to prosperous socialism. Well, their plan for 2050, because they plan in 30-year increments, their plan for 2050 is to be the dominant superpower. Like, whoa, hold on.
Those two things don't go together.
Hold on. So how do you become a dominant superpower? Well, you got to have the most powerful Navy because that's how it's always been. No. 10 years ago, they're like, you know what? The next war isn't going to be fought with ships. It'll be fought with chips because we're entering the digital age. So, we graduate 450,000 engineers in the US. They graduate 4.5 million. 96% of AI citations are in China. They just came out with a new quantum chip that blows away what Google just announced 2 weeks ago. DeepSeek blows away ChatGPT. They are winning. Like my pinned tweet on Twitter is greatest wealth is created by investing in innovation. To invest in innovation means you have to invest in something that you believe in before others even understand. You'll be mocked and ridiculed for your non-consensus action, but it's totally worth it. That's absolutely true. The greatest investments come from investing in innovation ahead of other people. And so China has been investing in innovation and they're playing a different game. So Trump comes in and says, well, shit, how do we catch up? We outsourced over 40 years our pollution and our low wage jobs because we have become a consumer economy over the 80s and us boomers, right? We became a consumer economy, not a manufacturing economy post-war. And so we wanted to get the cheapest goods and live the nicest lives. So we wanted the pollution over in China. We wanted the low wage jobs in China so we could have good stuff. Well, now we're like, oh shit. Well, now they are becoming the largest consumer force in the world. And I tell the story all the time that 20 years ago, my friend told a story about his daughter came up to him and said, hey, Dad, I thought you said Santa Claus brings the presents. He said, well, honey, he does. Why? Well, why do they all say made in China? Okay. Because 20 years ago, it was about made in China. It was about exporting to get low wage stuff to import back so we could have a good life. Europe, US, everywhere. Now it's about made for China. It's the largest consumer population in the world, 700 million people in the middle class. They are the largest, most dominant consumer. Now you want to make stuff for China. So this idea of causing a trade war doesn't make any sense. Well, yes, it does. If you realize that now we are at a less optimal position and all the stuff with, Mexico and Canada has nothing to do with Mexico and Canada. It has to do with China, right? Because when we passed NAFTA and all this stuff, so now China, says, well, I can't send it to you directly, so I'll just send it to Mexico or Canada or Mexico. I'll send all the parts to Mexico. I'll assemble the car in Mexico, create some jobs, and then I'll ship it across, and it's a Mexican car. No, it's not. It's a Chinese car. And so all of this is now trying to be unwound. But here's the problem. We have 200 years of evidence that says tariffs are dumb. They've always been dumb. Adam Smith was right? Open free markets, right? Comparative advantage, right? If you're good at growing wheat and I'm good at growing corn, you shouldn't try to grow corn. I shouldn't try to grow wheat. We should grow what we do and we should trade. That's what makes life better. And if we innovate, then we should trade that stuff. So trade is good. Globalization is good. Deglobalization, Smoot Hawley, come to mind, Ferris Bueller's Day Off. Bad plan. And so I think a lot of the bluster is just bluster. And what we are realizing is China is in this superior, they're on the inner lane going toward dominance. And it's because you've heard the story about, well, who's playing checkers, who's playing chess. Look, in America, we argue about how to set up the checkerboard. And Putin's a grandmaster at chess, but China's not even playing those games. Checkers and chess are confrontational games. They happen in the middle of the board, right? The key squares. Go is not a confrontational game. It's a spatial and comparative advantage game. And you win by thinking about the future, not about your current move. And so they are playing a different game. And I think we finally woke up and realized, so we talk about tariffs, and what happens is suddenly people are freaking out. Well, here's the problem. We printed so much money and we've hypervalued stocks, right? The PE ratio, the price to book ratio of US equities is the highest it's ever been. Worse than 29, worse than 74, worse than 2008, worse than 2000. And so when you're overvalued, eventually you will fall back to a fair value. Now you can levitate. It's like, Wile E. Coyote when he runs off the cliff. As long as you don't look down, you will stay levitated in theory. Gravity actually works. But what's happening now is people bought stocks. Well, then they didn't buy enough stocks. So we'll lower interest rates to zero and we'll give you margin loans. So margin debt went up and people were buying stocks and then they were trading options. And so we've got this hyper leveraged society, gambling society, and everybody thinks it's great because NVIDIA is so high. Well, but the reality is that no company can sell at 30 times revenues and make a good return going forward. It just can't happen. Now, can that stay high longer than you think? Sure. But once it starts to go down, once DeepSeek happens and you erase $500 billion of market cap in an hour, people get margin calls. When you get margin calls, again, you don't sell what you want to sell because the stock went down. You sell what you can sell: gold, bonds, stocks. Bitcoin. And so now you've got an unwinding of that. And so in this whole, I did a presentation the other day called, tariffs everywhere. Did anyone stop to think? Right? On the old, rhyme of the ancient mariner. And I'm doing a follow-up in a couple of weeks called, tariffs everywhere. Is the investment market starting to stink? And so I do have concerns that we're on our way to a recession, right? Because you've seen the GDP now collapse from 4% to minus 2.8. So arguably we're going to have a little, ugly setback in growth. Germany's already in recession. Europe broadly is close to recession. Japan's always been kind of hovering on recession. We could be in recession. That's bad. And that's because global trade is drying up. Well, if that happens, there are going to be more margin calls. And in the short run, assets, even like Bitcoin, despite the strategic Bitcoin reserve, it could go down. I don't think it will because Scott Bessent said this yesterday on TV. And Scott is amazing. I've known Scott for 20 years. He's a great pick for Treasury Secretary, super smart. In fact, what's interesting, his hedge fund was called Key Square, about the 4 key squares in a chess game. Very interesting. So he said, we're going to get interest rates down because we can't refinance the debt. Why are interest rates going up? Remember, the Fed started cutting last year. So why did the 10-year rate go up? Because China's playing go. They're selling their treasuries, which they had been buyers of treasury. So when there's lots of demand, then yields go down, prices go up. When they start selling, prices go down and yields go up. And so everyone thinks, Trump's right. Trump's saying is right, which is trade wars are easy to win. No, they're not. They're never easy. And there are no winners, right? There's just losers. And so China, I believe, is winning. And look at Chinese stocks, they're going straight up. BABA and smart investors like David Tepper and Michael Burry own a lot of them, and we do too. But I'm not in their class. I'm not trying to say that. I'm just saying we happen to own a lot of Chinese stocks too. But ultimately, I think we're in a place where the response is going to be massively good for Bitcoin. Right? We're going to have to cut rates. We're going to have to increase the money supply back to high single digits, maybe even low double digits. And in that world, one Bitcoin's one Bitcoin, but we don't price in Bitcoin, price in dollars. So the price is going to go up.
Yeah, this is where we have sort of these two forces playing at the same time. And Steve Cohen was talking about this yesterday, or not yesterday, but the other day as well, where he was saying, he predicts that second half of this year, we could get down to 1.5% growth, right? Tariffs, slowing immigration, Doge obviously is going to have an impact in the short term. The question, I think, is how long does this last?
Yeah.
Is this a short reset where we'll quickly reset and then assets will rise again? The midterms in 2026 are obviously going to be on Trump's mind. Trump does well when stocks are rising. He wants to support the economic growth and wants to support the wealthy in that way.
Yep.
What are your thoughts on the timing?
Look, 100%. And it's a great insight because that is how the 4-year political cycle works. You take your medicine in year one, and you beat down the market so that it can rise into midterms. But really the important year is year 3. Year 3, now it's less important for someone who can't get reelected, but year 3 is usually the year where they throw everything, tax cuts and money supply growth, and you get, and all the big boom years are in the 3rd year of presidential cycles. And most presidents have a recession in their first year. Now, this is a funky one because he was president once and now he's president. So is it his second term or his first term? Well, it is technically his second term, but it's kind of like a first term because he wasn't president, the previous 4 years. And on top of it, the last administration was a shit show. I mean, there's no other word to describe it. I mean, a complete and total shit show. No budget discipline, fraud. The whole Ukraine money laundering thing is it's crazy. I mean, for someone to actually say, well, I can only account for 70 billion of the 170 billion you sent me. Really? I mean, like 100 billion just vanished? I mean, well, actually it didn't vanish because we know, with all the fires out in California, a whole bunch of the homes that got burned down were owned by Ukrainian people that were in the cabinet. I'm like, that's weird. So all kinds of weird stuff happening. But the last one, $4 trillion deficits, Harris's plan, which was not a plan. It was, I don't like to speak ill of people, but what she presented as an economic plan was the closest thing I've ever seen to brain death in the 61 years I've been on this planet. I mean, it was terrible. And again, I'm not saying that Trump is rocket scientist, but what Trump does, like Reagan, he surrounds himself with great people. I have incredible confidence in Scott Bessent, in Lutnick, in a number of the people in the administration, particularly on the financial side, and the people that are gathering for this crypto summit on Friday. I mean, there's some really, really smart, talented people that understand economics and finance. And I think, we'll end up with some good outcomes. Now, to answer your question, I think it's a short-term reset. I don't think we're going into a depression. I don't think it's 1929. There were a lot of tweets on Monday night, that Black Tuesday was going to happen yesterday, and thankfully it didn't. But look, the valuations are such that we could have a really meaningful, long, drawn out, 10 years of no return in U.S. stocks. That would not surprise me. But I don't think it's down 2% every year for 10 years. I think it's probably a flush and then a response and then a comeback. Because again, I'm 61. I'm the second to last year of the boomers. My wife's 60. She just turned 61 too. I'm about to turn 62. But we're the last 2 years of the boomers, and we still got a decade before we can take our entitlements. So you got at least another 10 years where you got to prop up that generation because all of our wealth, the boomers, is in real estate and stocks. So you can't let those two things go down. And my guess is they won't. And so even if there's a short-term flush, which they're probably, Stevie Cohen's pretty smart guy, I think there will be. Economic data are pointing to it. Leading economic indicators are pointing to it. So all that said, I think it will be short-lived because I think the response from the U.S. government and mostly from China is firing the liquidity bazooka like we've never seen because they can't afford to have what happened to Japan happen to them. Because Japan, remember, in the 70s and 80s was the economic miracle. They were going to take over the world. We would send our people over to study under Japanese companies. And then they had a deflationary debt collapse, and they've been, moribund for 30 years. China can't afford that because they got too many people. So they are printing capital, and they're in a different position. They have more reserves. They have the largest reserves in the world, over $3 trillion. And so they have the economic power to recapitalize their banks, to, sweep the bad real estate stuff under the rug. And I'm sure you've seen the videos, right? Or if maybe even been. If you go to China, it's unbelievable. It's like living in the future. I mean, it's absolutely stunning what they have achieved. And I love the pictures where it shows, Shenzhen 30 years ago and Shenzhen today. It's like, oh my God, it was a field. And now it's this metropolis, like right out of a science fiction movie.
So before we wrap here, Mark, what does this mean for investors when they're thinking about their allocation for, let's maybe take a couple of different scenarios.
No, first principles. Like you said this best at the very beginning. Investors and investing has always been the same, right? Everyone should have 3 buckets. You have a liquidity bucket that funds your lifestyle, 5 to 15% to pay the bills and pay the rent and travel and food. And that needs to be liquid. It needs to be high quality. It can't have lots of volatility. That's your liquidity bucket. Then up here, you got the 10 to 15% of the get rich bucket. And that's where I always say that's where you're doing the friend's condo deal, the brother-in-law's venture deal, the hot stock tip you got. You're going to lose it all, so keep it small. No, I'm just kidding around. But that's where you put, things that you think have big potential to return lots. And some of them go to zero, but that's okay, because that's where you take your big tail risk. Then 70% is in the stay rich bucket. Well, you say, well, what if I'm not rich yet? Well, then you got to have more in the get rich bucket, plus your income and plus your, you want to get some passive income. So, but that stay rich bucket, 70%, that needs to follow, the endowment model, right? Which is a diversified portfolio of high volatility assets. And the younger you are, the more volatile, right? That are uncorrelated. Like, I believe if you're under 65, it should actually be against the law to own bonds. Like literally, it should be against the law, especially in your 401k, because you can't touch your 401k until you're 71 and a half. So why would you put bonds in there? You should have venture capital and real estate and commodities and Bitcoin and all the most volatile things, because you can't touch it. Bonds are for the liquidity bucket to spend, nothing else. So in the stay rich bucket, you want to have an equity orientation, but equity doesn't mean stocks. It means private equity, real estate equity, commodity equity, stock equity, digital assets, not equity, but digital assets. Bitcoin should be a meaningful piece of that portfolio. Why? Well, because it's the perfect asset. It has 80 vol, which means it has a long-term high compound rate of return, right? It has the same vol as Amazon, and yet it has twice the compound return. Now, it's only been doing it for 16 years instead of 30. So Bitcoin's number will come down and they'll probably have the same, but they have the same vol. I use Amazon all the time. Amazon, every year for 30 years, has had a double-digit drawdown, including this year. It's in one right now. When was the right time to sell it? Never. But who bought it on day one and held to today? 5 people: Jeff, mom, dad, ex-wife, Bill Miller. That's it. Because everyone gets shaken out by the volatility. But the beautiful thing about a stay rich portfolio, by having uncorrelated assets, why Bitcoin's so perfect, why Amazon's so good, they're not correlated with one another. Bitcoin is 0.0 correlated to bonds and 0.15 correlated to stocks. So every time you add it to the portfolio, your risk goes down. Like Harry Markowitz. And I was lucky. I got to study under Dr. Markowitz at University of Chicago. He won the Nobel Prize for the most genius thing of investing there is. The riskiest thing you can have is cash. The dumbest asset you can have is cash, because every day you hold cash, it loses purchasing power. Now, you want to have some, to pay for lunch or pay for dinner or pay for your rent. But anything above some is bad. So how do you fix that? Well, you can add bonds. Well, bonds are riskier than cash, right? But the risk of your portfolio goes down because you're not losing to inflation as much. Well, then what if you add stocks? Well, those are riskier. Yeah, they could go down, they could lose, but the risk of the portfolio goes down. When I add venture capital, risk goes down. Add real estate, add Bitcoin, add any asset that's uncorrelated, the risk of the portfolio goes down. Your return per unit of risk, the Sharpe ratio, goes up. So that's how you want to think about investing. The younger you are, the more heavy into the highest volatility assets, venture capital, like, again, innovation. There are 4 assets that you can own: stocks, bonds, currencies, commodities. That's it. Mark, what about hedge funds? Hedge funds are a type of holding, like a mutual fund or a private partnership. You can own stocks, bonds, currencies, commodities. What about private equity? I own a common stock, a preferred stock, or a convertible bond. What about real estate? I own the commodity, the land, or the equity, or the debt of the deal. Stocks, bonds, currencies, commodities. That's it. But those 4 things are created by the 5th asset, innovation. Without innovation, none of that other stuff exists. So you want to have exposure to innovation, to new ideas, to agentic AI, to blockchain technology, to decentralized exchanges, to all of the things. Basically, when someone tells you that only the bad people are using it, buy a lot of it. If people tell you it rots your brain, buy a lot of it. If people tell you that it has no use in normal society, buy a lot of it, because those are the things that the current generation doesn't understand. And when you add those to a portfolio, your portfolio gets better.
Mark, fantastic advice. This has been just an absolute pleasure and a treat to have you on the show today. Thank you so much.
No, so much fun. I apologize for talking too much, but that's...
Don't apologize.
That's what I do.
I'm excited just to sit here and listen. I learned a ton, as I'm sure our listeners did. Really appreciate your time today. Everybody, thank you so much for listening in. We will see you guys live again next Wednesday, or we'll see you tomorrow. Every day we are here for you guys. You can check out the show. And as I always have to say, none of this is financial advice. Disclosure, disclosure, disclosure. This is for information and educational purposes only. If you are going to make an investment, you should seek your own professional financial advice. Stay informed, stay safe. And as Mark said, have a solid allocation in where you are taking risks within your portfolio, because when you make these investments, there's always
Jay, one
risk.
last thought on that. Investing is all about taking risks that you're compensated for. If you avoid taking risk, you're not investing, right? Investing is about taking risk, but don't take risks where you're not compensated. Like buying stocks at 40 times earnings, maybe you're not being compensated. But buying stocks, like Alibaba, where it was trading at 8 times earnings, that you're being compensated for that. So investing is about taking intelligent risks that you're compensated for.
Very well said. Mark, thanks again for your time today. Really appreciate you joining us. Thanks for listening in, everybody. Have a wicked awesome day.